basically, could you talk to us about the factors that went behind the earnings this time around? And even though the net loss has widened this time around, but a couple of brokers who actively track the stock,
yes,
according to them, it's still better than the expectations. So tell us the main factors that led to the earnings this time.
You know, I said the net loss is not entirely representative because, you know, after the corporate tax cut came from 35% to 25%, we wanted to enjoy the benefit of 25% for eternity. So we had a deferred tax asset of 2,800 crores. We marked it down to represent the change of corporate tax rates. So to the uninitiated, let me just say that this is an accounting entry. It's not a cash flow entry. And the main thing to therefore look is what has happened to the profit on a operating level. And I'm very happy to say that this is after a long time, we have turned the corner. And this quarter, we have actually reported a profit before tax of rupees 100 crores, which was actually a loss last quarter. So it's actually a good development for us.
Sir, give us more details of how the wholesale book panned out and the retail book as well. What kind of trends did you observe there, and the disbursements in both these segments?
Since 4 quarters at a stretch, you know, the disbursal of the retail trend is incrementing anywhere between 3,500 to 4,000 crores a quarter. It has grown from 36 to 40, 40 to 44, 44 to 48 in the last 48,000 in the last quarter. So that trend is set, and I think that trend will continue. As far as wholesale book is concerned, that trend is the other way around. That book has come down from about 56,000 crores to something like about 46,000 crores now. So, so we are actually seeing that the retail book is actually replacing the wholesale book.
So one of the concerns regarding your bank continues to be about the infrastructure book, even though that's been coming down as a conscious effort that you're making. But yesterday's Supreme Court order, you know, does that have a negative impact on you? Because I believe you have one of the largest exposures to the telecom sector.
First of all, you know, as we have guided in the past, that we had about a 26,000 crore of infrastructure loan book at the time of merger with Capital First. Now that book is about maybe 17,000 or 18,000 crores. So you can see the trend line is down. I have already guided that we will take the infrastructure financing book to zero in the next 5 years. So I think we are well on the path of that. Now, with regard to your specific question on the telecom sector, as you know, the key thing to note is that I'm sure India doesn't want a duopoly market or a monopoly market, and there hardly left 3 players in the ring. I think you know, after Tata's shut their shut their telecom business, and so did Reliance Communication. So I think it will be really in the interest of the country, and I'm sure government will like to keep the telecom sector alive, and we got to wait and see what sort of package they come up with to keep the industry going.
So do you anticipate NPAs rising in that particular sector?
Not in the near run, because many of our exposures have a long-dated repayment schedule. And when we have a long-dated repayment schedule, there is enough time and enough water to yet flow down the river on this issue. So there's enough time. And I think, like I said, we got to watch how the telecom industry evolves from here and how the 3 big players play. I must point out one very important point here. All 3 groups that are now standing, let me say the Birla Group, which has the Vodafone Idea, the Reliance Jio Group, and the Bharti Group, are very strong groups. And therefore, we derive a lot of comfort from the individual groups here as well.
Okay, sir, just one last question. Your margins have improved on a sequential basis in an environment where the repo rate is on a declining trajectory. So going forward, what is the trajectory that you see for your margins going ahead for the balance year?
You know, our margins are increasing by about 15 basis points every quarter. And as you know, we started from a a low net interest margin position because of large infrastructure and corporate loans, which usually have a very low margin. But like I said before, every quarter we're replacing 4,000 crores of wholesale loans, which yield us between 9.5% to 10%, with retail loans which yield us anywhere between maybe 12 to 16%. So the net impact is positive for us. Because of this, we do expect that every quarter from now on, at least for the next few foreseeable quarters, net interest margin should increase by about maybe 14 basis points or 15 basis points every quarter. It's simply because of retail replacing wholesale at better margins.
Mr. Vaidyanathan, thank you so much for joining us. It was a great pleasure talking to you. And with that, we'll slip into a short break.